The region, the Hang Seng Index overnight finished up better than 2%, as you can see. Mornings with Maria is live right now. Time for the word on Wall Street. Top investors watching your money. And joining me right now is Bulltech Capital Markets Chief Strategist Catherine Rooney Vera, LPL Financial Chief Market Strategist Ryan Dietrich, and Michael Lee Strategy Founder Michael Lee. Great to see everybody this morning. Thank you so much for being here this Monday morning. Ryan, got to pick up the pace in terms of rate hikes. Catherine, Michael, Jamie Dimon released his annual letter today. He addressed the economy. He addressed the Russia war on Ukraine. Your thoughts on how to allocate capital here? Did anything strike you about that letter? And what do you think drives markets going into earnings season, which is just a week and a half away?
Yeah, look, I tend to agree with Ryan's sentiments that this should be a pretty good earnings season. However, I think the points that Catherine has made about yield curve inversion and hiking into what seems to be an imminent recession are a little bit more significant. So I'm still long stocks, but I'm long all defensive sectors. So my top pick right now is the energy sector. I think you have a supply-demand story that's going to continue to play out. This is a relatively, this is the smallest sector of the S&P 500, so by definition, it's almost under-owned, as well as a lower multiple sector versus everything else. So as we see continued liquidity come out of the market, it's harder to compress multiples that are already lower. Many of these names that represent the sector are higher yielding, so they tend to be a little bit safer. And again, this is a supply-demand story that is going to continue to play out regardless of what goes on in the economy, what goes on in the rest of the world and in markets. And then I also own utilities and staples. And so the yield curve inverting is not a surefire recession indicator, but it's about as close as you can get. And I agree with Catherine that I tend to look at the 230s because that represents your average GDP plus inflation over the next 7 years. So if that's negative, that means the bond market is telling you that we're at some point going to have a contraction almost imminently. And when you have the stock market saying things are great and you have the bond market saying the world is we're going to have a recession, the bond market is usually a lot more accurate than the stock market. But at this point, I wouldn't say I'm bearish. A little bit more cautious all over our markets. I could say you could stay long these defensive sectors because if we do engage in a late cycle rally, you're still going to be able to make money. And if we do come into a recession quicker than a lot of people believe, you're going to outperform the broader indexes by being in these defensive sectors.
Mm-hmm. All right. We will leave it there. Great to see you all. Catherine Rooney Vera, Ryan Dietrich, and Michael Lee. Thanks very much. Have a good Monday. We appreciate your time this morning. We've got much more ahead. Coming up,